Good morning. My name is Andrea, and I will be your conference operator today. At this time, I would like to welcome everyone to the Canada Goose third quarter fiscal 2021 earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during that time, simply press star, then the number 1 on your telephone keypad. If you would like to withdraw your question, press the pound key. Thank you. I would now like to turn the call over to Patrick Burke, Senior Director, Investor Relations. Please begin your conference.
Thank you, and good morning, everyone. With me are Dani Reiss, President and CEO, and Jonathan Sinclair, EVP and CFO. After prepared remarks from Dani and Jonathan, we will take your questions. This call, including the Q&A portion, includes forward-looking statements. Each forward-looking statement is subject to risks and uncertainties that could cause actual results to differ materially from those projected in such statements. Certain material factors and assumptions were considered and applied in making these forward-looking statements. Additional information regarding these forward-looking statements, factors, and assumptions is available in our earnings press release issued this morning, as well as in the risk factors section of our most recent annual report. These documents are also available on the investor relations section of our website. The forward-looking statements made on this call speak only as of today, and we undertake no obligation to update or revise any of these statements. Our commentary today will include certain non-IFRS financial measures, which are reconciled in the table at the end of our press release issued this morning and available on our investor relations website. With that, I will turn the call over to Dani.
Thank you, Patrick, and good morning, everyone. I am pleased to speak with you today about our performance in our third quarter, which has exceeded our expectations. We began this fiscal year with many unknowns, so we leaned into what we knew to be true. We advanced our long-term plans to best capture and serve demand, while at the same time placing our business in the best position for continued growth. This approach has delivered strong results when it matters the most. Today, I will provide an overview of our third quarter results and share an update on 3 areas. 1, our strategic areas of focus. 2, our purpose-based commitments. And 3, our outlook for the rest of the fiscal year. In the third quarter of the fiscal year, our business showed remarkable resilience, and we have outperformed our own expectations. Total revenue increased by 4.8% to $474 million, despite extensive closures and operating restrictions. This marks a return to growth for Canada Goose in our biggest quarter, and we did it with strong profitability and cash flow. Adjusted EBIT margin in the quarter was 33.3%, and free operating cash flow increased by $75.1 million to $309.6 million. Our third quarter results reflect the impact of our strategic long-term initiatives, our flexibility, and key investments. To give you further context, here are a few highlights. First, I'd like to give an update on our digital business, which we believe to be a foundational component of the future of retail. We have invested heavily in our e-commerce business for years with a long-term view. This year, we successfully executed against that long-term strategy, and at the same time, strategically deployed additional resources to better capture and serve demand around the world in our peak season. As a result, our global e-commerce revenue increased by 39.3%, and we are encouraged by the strong momentum and acceleration that we continue to see across our e-commerce business in the fourth quarter. This quarter, I feel it's important to give deeper geographical insight into our e-commerce business. Across each of our major markets, we saw strong double-digit growth. Europe was particularly strong, and this includes France, Germany, and Ireland, and a nearly doubling of our digital business in the UK. In mainland China, Tmall continues to be a bright spot and a powerful channel for our brand. And in our well-established sites in Canada and the United States, we saw a strong increase to revenue from a contribution perspective. Now, to our next strategic priority, mainland China. On our last earnings call, I spoke about the growth plans that we put in place for our business in the region. We have continued to execute on these plans. In the past year, we have more than doubled the number of stores we operate in the market. This quarter, we saw that our investment has delivered strong results, and our mainland China DTC revenue has increased by 41.7%. We're still very early in our journey in mainland China, and we see significant opportunity to continue to grow our network in the region. In a year that began with so much uncertainty, throughout it all, we've learned more about shifts in our customers' behavior, which has shaped our strategic approach moving forward. On our last call, I discussed in-store omnichannel shopping, which had just gone live. We believed that it would be a needle mover for customer experience and conversion, and I am pleased to say that it has been. As the path to purchase continues to evolve, this quarter we truly saw the power of the endless aisle. We consider this a validation of our approach and commitment to enable Canada Goose fans to shop with us wherever they are, whenever they want, and with access to our complete assortment. Today, I also want to highlight the continued importance of sustainability across our business. We are steadfast in our commitment to strengthening our communities, protecting our planet, and working towards a better future for generations to come. In this quarter, we introduced Human Nature, a purpose-based platform that unites our sustainability and values-based initiatives. It is the driving force of our enduring commitment embedded across every aspect of our operations. The role of business has evolved in today's world, and driving meaningful change has become fundamental to today's consumer. We are focused on keeping the planet cold and the people on it warm through our sustainable impact strategy, continued product innovation, invigorating global communities, and building culture through the arts. We've been trusted to protect people from the elements, and now, through Human Nature, we are taking warmth to an even deeper level. Building on that, this past January, we launched our most sustainable parka to date, the Standard Expedition Parka. This brand new style, inspired by the iconic Expedition Parka, encapsulates our heritage, renowned functionality, and epitomizes sustainable innovation. This product is a significant leap forward for our brand, helping to set the standard for the future of outdoor at Canada Goose. We've kept sustainability at the forefront throughout the past 6 decades, driven by constant innovation for the betterment of both our consumers and the planet. And I'm proud to say that this is only the beginning of our sustainable apparel journey, and that the consumer response has matched our own excitement, as the style has nearly sold out. Further to the topic of brand momentum and consumer relevance, last month we partnered with Shanghai-based Angel Chen, our first ever guest designer. We challenged her to take her heritage pieces and co-create a capsule based on her innovative design direction. The collection is a relevant new perspective and another important hype moment for the brand. And lastly, I would like to take this opportunity to welcome Michael Armstrong, who joined our board of directors in January. A 22-year industry veteran, he is currently EVP Worldwide Television, Licensing, and Operations for Viacom CBS Global Distribution Group. I'm confident that his vast popular culture, entertainment, and media exposure and experience will provide a valuable perspective as we continue to execute on our long-term growth strategy. And with that, I'll turn it over to Jonathan to go over the details of our financial results and outlook.
Good morning, everyone. Thanks, Danny, and thank you all for joining us. Looking at our Q3 performance and our current trends, there are 3 key themes that stand out. Canada Goose has returned to growth. The resilience of our earnings and cash model has delivered, and we're entering the final quarter of the fiscal year with strong momentum. Starting with the top line, total revenue increased by 4.8% to $474 million, with significant sequential improvement across our business. This reflects global demand strength, as well as our ability to pivot our distribution to where the consumer is shopping today. Coming out of the first COVID wave in the summer, we were in the midst of a massive digital shift in consumer behavior. We knew that e-commerce was as close as we could get to an always open channel. Against this, we were proactive in our investments to prepare for the full winter selling season, from logistics to inventory, marketing, and experience. The result is a strong acceleration in performance in our biggest quarter. E-commerce grew by 39.3%, driven by meaningful increases to both traffic and conversion. Operationally, we're pleased with how smoothly our 3PL network handled and shipped record online volumes during peak. The transition we completed in the summer to enhance scalability and service levels was central to achieving this. Geographically, there was well-balanced double-digit growth in all of our major e-commerce markets. In North America, we saw strong contributions from our well-established sites in Canada and the US. In mainland China, our shop in Tmall's luxury pavilion continues to be a powerful engine for growth. And last but not least, our momentum in Europe was exceptional. This includes very strong results in Germany, France, and the Republic of Ireland, and a near doubling of our digital business in the UK. Alongside e-commerce, our other big strategic bet this year was store expansion in Asia. With a total shut-off of international shopping, we knew that serving the world's largest luxury consumer base at home was critical. DTC revenue in mainland China increased by 41.7%, with existing stores near pre-pandemic levels and the completion of our 2 remaining openings in Changchun Charter and Shanghai IAPM. This strengthens our conviction in runway as we further expand in Tier 1 and Tier 2 cities, complemented by the reach of Tmall. At our stores in North America and Europe, we faced outsized headwinds from capacity restrictions and mandatory closures, compounded by a lack of international traffic. In Q3, we lost 35 trading days for each of our 3 locations in Toronto, with Ottawa and Montreal also shutting at the end of the quarter. In London, we lost 36 trading days, with Paris and Milan each closed for 30, as well as Berlin for 12 days. These closures include some of our most productive stores globally in their biggest and busiest days of the year. Against this, to achieve total DTC revenue of $299.4 million, only $2.4 million less than last year, is a great result. Relative to Q2, we offset a much greater proportion of retail declines through e-commerce, and when open, the stores delivered strong productivity. Wholesale increased by 2.7% to $160.8 million. This was driven by later shipment timing, based on requests for more of an in-season fulfillment model. We're pleased with the performance of our partners this fall winter, and we will continue to take a controlled, brand-first approach to managing this channel. Moving to earnings and cash flow, adjusted EBIT margin was 33.3% in the quarter. This is a level of profitability most brands never come near, let alone in times like these. Our resilience is grounded in full price economics and highly productive distribution. Consolidated gross margin was 66.8%, with DTC at 77.9% and wholesale at 51.5%. Both channels were above typical levels due to temporary tailwinds. Gross margins in the mid-70s for DTC and mid to high 40s for wholesale remain the right level for our business over the long term. That said, these increases also reflect the durability of our gross margin fundamentals. Going down the P&L, DTC operating margin was 55%. Retail profitability was impacted by operating disruptions, but was still very strong, and the uplift from e-commerce growth was a positive partial offset. Wholesale operating margin came in at 42.9%. While aggressively managing costs and cutting discretionary spending, we are well equipped to play offense when we see the opportunity. We accelerated SG&A investments in brand and demand building while still delivering a strong profit this quarter. Adjusted EPS per diluted share was $1.01 compared to $1.08 last year. Moving to cash, free operating cash flow was $309.6 million, an increase of $75.1 million, driven by reduced working capital. As a vertical manufacturer with an evergreen offering, we are executing against our planned drawdown of staged goods. Inventory decreased by 2.6% relative to Q3 last year and 17.8% relative to the end of fiscal 2020. We remain on track to deliver a significant year-over-year decline as we close out fiscal 2021. In terms of liquidity, we are in a strong position with low leverage and a high degree of flexibility. Cash was at $469 million at the quarter end, alongside an additional $256 million of available borrowing capacity in our undrawn revolver. Finishing with current trends. We are encouraged by the continued acceleration that we have seen in e-commerce growth since December. On the retail side, however, store closures and mobility restrictions have intensified. 25% of our own retail stores globally are currently closed. Globally, we've also seen a slowdown in foot traffic in certain markets in response to new movement restrictions. Recognizing this is a dynamic situation, we believe we are well positioned to continue moderating these headwinds through our digital business. In wholesale, the vast majority of our shipments have been completed for the year. Q4 is seasonally a very small quarter for the channel, and we currently expect a low double-digit year-over-year revenue decline. We concluded our contractual obligations for PPE manufacturing in Q3, and as a result, we do not expect further revenue from these activities in the other segment in Q4. In terms of gross margin, we do not expect the DTC and wholesale gross margins in Q4 to repeat the large year-over-year increase we had in Q3. This is due to seasonal spring product and a reduction in wage subsidies in manufacturing. Lastly, we expect total SG&A in Q4 to grow at a similar rate year-over-year to the rate we saw in Q3, driven by our continued investments in brand and demand building. At the start of this year, we moved aggressively to protect the downside while investing with conviction where we saw opportunity. Our success this quarter shows that strategy is working. We can grow and we can be highly profitable in a challenged operating environment. We believe that this underscores our potential when the world comes out of this pandemic. We know that the path there won't be a straight line, but we're on the right track. And I look forward to updating you on our progress on our next call. And with that, I will pass it over to our operator to begin Q&A.
At this time, if you would like to ask a question, please press star, then the number 1 on your telephone keypad. Please limit your questions to one question and one follow-up. Your first question comes from the line of Omar Saad of Evercore. Omar, your line is open.
Thank you for taking my question. So, I'm wondering about, I appreciate the information around the tourist impact. It sounds like it was a pretty big drag, but maybe you could dive in a little bit deeper, especially in North America and Europe, where there, has historically been a strong tourist customer. And maybe you could also shed some light on the mix of your business between locals and tourists in your key market. And then also, the Chinese tourist is such an important tourist. Do you have the footprint and presence you need in China to recapture some of those lost tourists there yet? Thanks, guys.
Hey, Omar, thanks for your question. Good question. We're certainly in an environment with essentially no international traffic in North America and Europe. Not effectively, tourism has been closed, and this has been the case since last spring. So I'm really pleased with the strength of the demand and that we've seen from local markets and from all of our consumers in these markets. Actually, it's been strong in and of itself. And for example, our revenue in Europe and the rest of the world increased by 30%. It's a region which has been particularly hard hit by tourism declines recently, and we're up there. So I'm very encouraged by what we've been seeing in our local markets from our local consumers.
And if I can just add a couple of points to that. I think, in a pre-COVID world, you'll have heard us say many times that our retail traffic had roughly a split of 50-50 between local and international consumers. And strategically, our focus this year has been on serving those traveling international consumers at home and driving demand in the local markets. And the fact that we were able to grow our business in Q3 with all of these headwinds is really, really encouraging. When it comes to China, we've had a great couple of quarters of performance in mainland China this year. This most recent one up 41.7%. We are seeing great progress both in our existing stores and in the new stores. We've got a very clearly established strategy of Tier 1 and Tier 2 complemented by reach, and we are able to take great advantage of that market by executing on that strategy, and we're very pleased with how it's going.
Your next question comes from the line of Jay Sole with UBS.
Hi, good morning. This is Mauricio Serna on behalf of Jay Sole. A couple of questions. I know the fourth quarter you mentioned is not, that relevant on the wholesale channel. But what are you seeing in terms, of wholesale book orders? I don't know if it's too early to ask maybe on the fall season. If you could comment also a little bit about how the e-commerce channel grew throughout the quarter, throughout this last quarter. And lastly, as you were mentioning your focus in China and Tier 1 and Tier 2 cities, how does that translate into potential store openings as we move into the next couple of years? Thank you.
So I think our wholesale order book is something we typically talk about in the next call, but we run a process which we're running this year, and we're very pleased with how it's going. I think that I can give you some assurance about that. We talked a little bit of color on the e-commerce performance geographically speaking, but I think we talked in our last call about how we'd seen acceleration toward the end of the second quarter in our e-commerce performance year over year. That's an acceleration that continued to build through the third quarter, just as the numbers got bigger and just as it really mattered. And that acceleration is something that I'm pleased to say has continued beyond the third quarter and into the fourth quarter. And when we think about the future and where we're going with stores, we're continuing to execute on our strategy. There's no change to that, and that's something we'll comment on further in due course. But suffice to say, there is no change to our strategy. We see DTC as an important and key avenue for growth in this business, both online and physically.
And to add to that, I agree. with all of that's been said, I think that I'm particularly proud this year of this quarter of the team and our ability to have our biggest quarter ever under these circumstances during a global pandemic. We've seen the global consumer from all over the world drive growth and acceleration and really cement us as a lifestyle brand that they are gravitating towards, and that makes me very optimistic and hopeful for the future.
Your next question comes from the line of Kate Fitzsimmons of RBC Capital Markets.
Yes, hi, good morning. Congratulations on the return to growth. I guess I wanted to, two quick ones for me. You guys have noted a couple times on the acceleration in the e-commerce business here in Q4. It is interesting because it seems at least demand for your brand, tends to maybe happen earlier in the winter season. So curious what you think is driving the acceleration there. Any comments on regional performance or response to early spring selling? That would be helpful. And then secondly, Jonathan, you noted some brand building investments on the SG&A in Q3. What was the nature of some of these kind of investments? And as we look out to Q4, what are some of the strategic expense priorities in Q4 and beyond? When we look at the channels, wholesale, DTC, and also that unallocated expense bucket, that would be helpful. Thank you.
Thank you for your question. I will start off by giving you some commentary about that. I think that we've, as we saw in previous quarters and throughout this year, the consumer's mentality is much more of a buy now, wear now mentality. I think that's important, given the shift to the right. And I think also, with regards to our brand specifically, we're a very relevant brand at a time like this. We're a survival brand. We make products that last. We make products that are functional. And I think that consumers these days are certainly in times like this that people are driven to products like ours. And I think in general, people these days are looking for real things that have real functional attributes and authenticity behind them. And I think that's part of the reason for the acceleration and continued acceleration.
And Kate, on the question of cost, I think the key investments that we've been making, as I sort of referred to it a little bit in my prepared remarks, are around brand and demand building. And we deliberately weren't investing as much. But if you think about the business being a much more of the buy now, wear now model that Tammy's just talked about, I think what's key is that you jump on the investment as the market becomes into season. And that's what we were doing. And whether it was around the markets that we were opening up online, or whether it was about the existing markets or in support of the markets where we're opening stores, we have been investing to build brand awareness, to build brand salience, and to capitalize on the demand and convert it into the business that we're reporting today. And that's something that, because it's a buy now, wear now model, and because this is now, we've got the peak continuing into Q4. That's why we're continuing to invest in it, and that's why you'll see the cost continue to go up. But we're very comfortable with that because we see the payback.
Your next question comes from the line of Ike Boruchow with Wells Fargo.
Hey, good morning, everyone. Just two quick ones from me. Jonathan, you guys had some great cash flow. There's a lot of cash you guys have on the balance sheet relative to years past. Any thoughts on use of cash or your capital allocation? And then, we appreciate the wholesale commentary for 4Q. Is there any commentary? There's a lot of noise with the store closures and whatnot. But any help on the DTC revenues that are embedded in your plan for 4Q as well?
Okay. So I think when it comes to capital allocation, our top priority is investing in the growth of this business. We see it as, and we've said so many times, but it remains true, huge untapped potential. And therefore, from our point of view, top priority, top return on capital is always going to be investing in the future of this business. And we said before we're going to invest 45 million this year in capital expenditure. That's very much on track, and that will rise and fall as the needs of the business demand. But that remains our top priority. We're not looking at other uses. So then thinking about Q4, I mean, we've had obviously the good momentum in and accelerating momentum in online, offset by the fact that some of the stores are closed. But as we move through the quarter, you've got to think last year also was pretty heavily impaired from about this point in the quarter on. So I think there's a strong case to say that this business has got very good DTC momentum.
Your next question comes from the line of Megan Annett with TD Securities.
Thanks. Good morning. So Danny, you touched on this in your remarks, but wondering if you could talk a bit more about the success of the various collaborations that were launched during the quarter and also early into Q4. So what kind of response are you seeing there from the consumer? And is there any color you can provide on the pipeline of collaborations that you're working on in the upcoming year? And just lastly, any update on the plans for the footwear launch that you can touch on? Thank you.
Yeah, thank you for your question. Collaborations are a very important part of our business, and they have been successful for us this year. We had our first ever guest designer this year, Shanghai-based Angel Chen. She designed a capsule collection for us, and it's been received very well by our consumers. And these are opportunities that provide. They really provide hype moments for our brand and ways for our brand to be reinterpreted by different designers for different markets. And this has been a collaboration which has been received well generally. And we do intend to do more guest designer collaborations in the future. It's definitely been something which works for us, as we do with our collaborations, which we've been doing for many years. In terms of footwear, we're still on track to launch that at the end this next fall. I'm very excited about it. I think footwear is going to be a very important category for us in the long term. I think we're doing it the right way. I think our strategy was very carefully thought through, and we're executing against that strategy well. And I believe that execution is one of our strong points. And I think that I'm very excited for the market to see what our footwear looks like and what we can do with it.
Your next question comes from the line of Oliver Chen of Cowen.
Hi. Regarding innovation and product, Danny, how are you thinking about focuses on the lighter weight product and non-evergreen? You have a really strong core. And then as we look ahead, inventory